Investors really seeming to be buying time ahead of half-year results out of the banking sector. How are you viewing and so playing the market at the moment?
Good morning and thank you for having me, Alishia. It's true there's been a kind of wait-and-see attitude on the investors' part. And I think what's important to note here is the period we are in the economic and political calendar, whereby we have the scheduled referendum in a month's time, and there's uncertainty maybe about the outcome of that. And also, this is also coupled with the half-year results of most banks, which, other than being expected to be positive, are also pegged to that issue of the political risk. So we have a kind of wait-and-see mentality, but we hope this will pan out to be a good thing rather than a bad.
Let's, for today, go through as many stocks and the status that they hold in the current market environment as we can in 5 minutes. And we're starting off with Safaricom here. It sits below the mid-range point, where the range being pegged out is between 5 shillings 50 and 6 shillings 10, and seems to be very well supported at these levels. The view out there, though, is that we should see this price sitting at around about 6 shillings 40. What's your view on that stock, and just how soon we can see some kind of sustainable uptick in this share price?
Well, indeed, we expect a counter with a PE of 14 to be playing around the 6 shilling mark. But we've seen it have its resistance at 590 and every time get its support back at 555, 560. I think what's more crucial to note here is who the players in the market are, and a recent report has shown that it's the foreign investors who are gaining a larger portion of the stake in Safaricom. And what we know, profit taking with the foreign investors is normally not an option. And we expect to see the price stabilize for a while. Another thing to note about Safaricom is the dividend payout. It's quite far away, about 2 months away. This may give actors in the market time to play.
Yep, well, certainly it does bode well for the counter that we are seeing foreign firms raising their shareholders as locals exit this counter. But there is lots of activity within the data space, specifically Safaricom bulking up to become a strong contender via its recent acquisitions in that space. What do you see this spelling for a player like Access Kenya?
This spells a lot of competition, and Access Kenya indeed may have to step up their game. They may have to look for countermeasures for this competitive edge by Safaricom. We had them recently acquire Geo Wireless, and we also had them acquire another company, I think it was Interconnect. It means they want to step up their data services. And we also saw in the results released around May that most of their revenue from data actually went up, and is what boosted their very good results. Access Kenya, on the other hand, yes, still a dominant player by its own right, but they may have to review their marketing strategy.
Well, we saw that share price easing back 2.3% yesterday. It's closed at around about the 21 shilling mark yesterday. It has, though, rallied 20% from its year low. So would you be buying at this stage of the game, or just sitting back waiting to see what unfolds first?
If I was to use relative terminology, I would say it's a buy, but not a strong buy in this case. Because looking at the all-time high at 40 shillings, looking at the IPO price at 9 shillings and 50 cents, we see a price at 20 shillings somewhere meet us halfway. And for any investor looking to come into the market, he may want to consider buying Access Kenya. But then again, we find most people who got into this counter got in at a price much higher. So for them, it may still be a wait-and-see stock, and that recommendation would be a sell.
Well, with some link to prospects that the telecom sector, both Scan Group is sitting amongst that lot via its contract with Bharti Airtel. That share price rallied close on 2.6% by the close of yesterday's session. How are you viewing that stock right now? Because certainly institutional investors seem to be wanting to gain exposure to the stock at the moment.
Well, we have the deal with Bharti. Bharti is going to take over the market in terms of rebranding the Zain as we so know it. This may be more of competition to Safaricom than any other. But looking at Scan Group Limited, we've seen the share rally. We've seen it have positive and good results. We've also had talks of mergers. with Ogilvy. I think that's the South African firm. So the prospects here are bullish, and we expect Scan Group to improve, and I think we may see its support at 40 and a rise further than that.
Kenya Airways, in the meantime, has signed a lease agreement for 2 more jets to be included into its fleet and aiding to its route expansion that we're seeing it now aggressively take on. I mean, KQ seems to be on the right track after having managed a turnaround. The big question is, with the turnaround into a profit status just having emerged, do they have enough in the coffers to actually fund this expansion moving forward, Robert?
Well, I think Kenya Airways is a stock not to undermine, and it's true that they have recovered from negative earnings, rather losses, to record profit this year. We've seen them expand regionally. They've moved to Juba, Mozambique, and now they acquire 2 jets on lease, I may add. And I think for Kenya Airways, the prospects are good. And what they may have to consider maybe is regional competition, maybe from, I say, Ethiopia Airlines, who are also doing equally the expansion at the same pace.